right, so let's get rolling. It is the beginning of the year 2021. We finally got 2020 behind us, and what a hell of a year. In all honesty, it was not the best years for a lot of people. Best year for a lot of people, but honestly, there's some people out there that was an amazing year. So try not to rub it in the face of all those people because they clearly don't want to hear it. But let's take a review because honestly, even though it was a rough year for the market in the middle of it, if you knew what you were doing and you were playing with some money management rules, even if you took some losses, you were able to have some big gains. And as you can see here on the S&P 500, clearly, even though we had a dip in the middle of the year, it came back and exceeded its highs as well as to keep going and finish strong for the year on a profitable year. So it was one of those things where, let me say that I've been reading, a couple books here, and a couple of areas they talk about is ourselves, retail traders, how often we fail, and a lot of it having to do with A, lack of money management, B, though, being able to stomach some of these big pullbacks. And, it's interesting to see this as an example. I'm glad I got to be a part of this because, yes, man, there were some trades I was in, and I was like, hey, yeah, that pullback is a little much for me. And as you can see, it ended up working out great. And, a valuable lesson for myself, hopefully a valuable lesson for everybody else. It's very important to understand what you're getting into, why you're getting into it, and where you're getting out. You need to understand your risk tolerance, okay? It's not about the reward. This chart looks great. It looks like if you held in there, you're profitable, you would have made a lot of money, but the question is, would you have been able to handle that V-shaped dip, as well as the second one up here at the top, too? There was a little bit smaller pullback as well. I was trading a good bit there, too. I posted a few trades on that, and I'll be honest, man, I nailed a couple of my marks a little wrong, but I definitely, eventually got it. Anyway, not everybody can stay in the game like that and make that stuff happen, and it's not easy. So, overall, I've managed to remain profitable for the year. I was able to get in some great stocks early on and start building on my retirement portfolio. That's doing exceptionally well. My day trading got hit a little bit more, but also, I was trading a lot more, so I took a lot more losses, and that's just the reality of being a day trader. So, but overall, man, I finished good, man. I'm really proud considering the volatility and what's going on. I've talked to some other friends too, and we share some of the same experiences, just learning experience, going through a lot of volatility. So look, enough about me. Let's jump back into this monthly analysis. I'm super excited to see where this year goes because, in all honesty, where could it go, right? We're at some all-time highs. We had some major pullbacks. You got the stimulus deal, all that great stuff. How will all of this be affected? Even more so, got a lot of new traders in the market, the Robinhood traders coming in and help push this market back up. We got another stimulus just hit as well. I just got mine. Hey. And so we'll see what happens here. So let's talk about it, all right? You can see here the power of these crosses that I use on this IMTF trade is very significant, and you can see a lot of pullbacks, occur in these areas. And sure enough, if you look here, it held that area and took off, and now we're just making all new highs. We are moving forward. Now, if we take a little bit lower look here on the weekly, if we take a little bit lower look here, we are in a breakout, and this breakout is holding, okay? So as you can see, we triggered here, and it did do a pullback, which is most exciting, and it kind of consolidated here. But then now we're finally going, and now we're moving. We got a nice little MTF cross here that's holding us up, and we're keeping it moving, and we're still in this trade. You follow the green line with the green dots, you trail your stop if you're on the weekly. My first target to take some profit is right here, and we keep going. So there you have some ideas of what you want to shoot for. If we go to the daily, let's see if we can for people that are maybe not into that high of risk tolerance on the weekly, we'll shoot down to the lower time frames, basically because I like to day trade from those lower time frames. Same thing here. Look at this daily. Daily broke out, spiked all the way up to here. We're in the trade. We're still in the trade. keeping it going, and now we're breaking new highs. And again, if you're taking this trade on the daily, you would target here to take some profits. All right, and you're still trailing your green stop. Moving down to the 4 hour. Okay, 4 hour, we should see a little bit more of that consolidation we saw on the weekly and the daily. Here we are. Sure enough, we're in another breakout. I love it when we have breakouts on top of breakouts on top of breakouts. Those are good. All right, so get in this breakout. You're still hanging in here. You're trailing, looking, and now we just need to break above here. We are at that point, so we'll see what happens when we open up for the new week. And if we break higher or if we get held here as a resistance. But either way, we're still in this trade. You trail it, target here on the 4 hour at 37.9750. That's where you want to maybe take some profit, tighten up your stops, all that great stuff. Preserve mode. Don't be greedy. Protect yourself. I'm going down to the 1 hour because I want to show you guys what I'm looking for in today's opening market. Okay. Now, if you take a look at this 1 hour here, we have a bit of a consolidation. All right. And if you go here, I'm going to mark off this level. And what I'm looking for is the middle of this consolidation. All right. I want to see where we open. If we open higher, either way, I'm looking for a pullback. Okay. So at least the middle of this consolidation is my line in the sand. Okay. It may not even pull back to that. I will be looking at a couple of pullback scenarios, but if it pulls back to this and holds, that's a good sign. Okay. That's ideally what I'm looking for. If it breaks below it, that's going to show me a sign too that maybe it's not ready to go higher just yet. Okay. And I'm going to keep looking for some opportunities because this thing is in a consolidating range. And when things consolidate, you want to keep an eye on. You want to be careful though, because you can get chopped up and eaten up inside that consolidation, right? The best thing to do if you're new, you're an amateur, is put an alert on either side of the consolidation range. Wait for it to break that, right? Break out, then pull back, close at that top of that or that low of that range, whichever side you're going, bearish or bullish, to confirm that it's going to hold. And that's when you want to look and possibly get in that direction of that consolidation break. But again, be careful because consolidations are a beast to trade within. All right. But at least now you can see where my line in the sand is. It's essentially the 50% area of this, consolidation range. And based on that line, you can really gauge the strength of this. Okay. If it does not pull back to that, it holds. That's going to tell you this is very strong bullish. Okay. So maybe go to some smaller time frames and look for some breakouts. Don't feel bad because you're missing out. Don't be like the rest of these Bitcoin people, we'll get here in a minute, that are feeling they missed out. I don't care. I'm not feeling like I missed out on some Bitcoin. Whoop-de-doo. Let's go down and take a look at gold. All right. So, taking a look at gold here. Really like what's going on here. Because it's I like when levels really point themselves out, okay? And they're very obvious, especially with these Ichimoku levels. You can see here, we trended up, we took the breakout. Once you hit this level here, the blue cross, you should have started tightening up your stop. As you can see here, as the green line moved up, okay, the dots follow the green line until this area was triggered, the preserve mode, and then the green lines moved up to the red line. So you're still in this trade if you're taking this breakout on the monthly, but now you're in preserve mode, so your green lines have moved up to help tighten up your stop. And you can see it came back and it hit this red line, right? And now it's bounced up and it's going back to retest the high. So we're looking to see on the lower time frames the probabilities of us reaching this high, right? Are we going to be able to still keep going up? And if you've been in and out or you missed out or whatever, there could be some opportunities. And let's go take a look. I want to keep our risk low. Okay, so here we are. And this is already a confliction. So again, telling the story of the higher time frame in relation to the lower time frame. The higher time frame is bullish. It looks good. It looks like it held that Tinkerson level. But yet here we are on the weekly and we're in an inversion. We got conflict, right? We're above the cloud, so we're bullish, but our Tinkerson or Cajunson are flipped bearish. Okay. Now, our momentum is still strong on the bullish side. Okay. So we really need to be careful trading. So if you're on the lower time frames, the higher time frames rule, so that ultimately you should really just be trading bullish. And if you are taking any bearish trades, you need to be very, 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 very disciplined. Capture profit quickly and keep your stops just be on your A game if you're going to go against the trend, okay? If you are going to go bullish, be also careful because you have areas now. If you take a look at this Cajunson, all right, if I pull this, if I make a line right here, it's going to be our first target bullish, and this Tinkerson here is going to be our first target bearish, okay? You can see here we got a cross and it held. That's a good sign, okay? Keep going from there. And then we're going to need to take a look at the lower time frame and see what opportunities. Be honest with you, if you're new to this, I would stay out of it until you get on either side of those levels, okay? Just see what it works itself out, right? All right, so again, here we are on the daily. We're bearish. We're just now breaking out of the cloud on the bullish side, but we're not quite really strong bullish yet. So in all honesty, we're probably going to get some consolidation here. So it's probably going to be a week or two before you can really get into this trade long-term, 1 week or the other, okay? So we need to be careful about that. I've marked off some levels clearly to see where we need to range in at. And if you are being daring and playing within that range, just be careful, be aggressive, capture profit at all costs, and don't be greedy. Let's take a look at the 4 hour. Look at this. Now, the daily wasn't that strong of a chart, okay? The week was in confliction, but yet here we are with a bullish breakout. Question is, will this breakout succeed? Probability-wise, I would say no, okay? But if you do take this breakout, just be aggressive in your targets, okay? Do understand before you get to these blue crosses, you do have some obstacles in front of you. So maybe tighten up your preserve mode once you hit some of those obstacles instead of waiting for the blue crosses, okay? So if you do take this, because it could take off, right? It's probabilities at the end of the day, right? I'm not a guru. I'm not crystal ball. If anything, I'm just like you. I'm just as the amateur. I'm trying to use a little reasoning, statistics, numbers, common sense, all the above. What I don't use is my gut feeling, all right? I'm using these charts to help give me a guide to the areas I need to get to, okay? Now, we had a little bit of a cool pullback here. Nice to a cross, an IMTF cross. It means there's multiple time frame support levels here that lined up on multiple time frames with Ichimoku levels. And you can see here it held, okay? And now we're going back up, and we need to break this first pivot here, okay, before we get to these entries of these blue dots. But a pullback within a breakout is a really good sign, okay? Especially if you can see here, look how it pulled back, touched that, closed above this Tinkerson level here, right? Then held it again, and it's going. So there's some strong bullish strength within this time frame, okay? Keep that in mind within this time frame, all right? So keep all that in thought process when you're taking these trades, all right? Let's not get greedy. So let's go take a look at crude oil, because crude oil has been very surprisingly trying to get back to being bullish. And look what we got here. All right, crude oil took a nice dip. Did not look too good. It's still bearish, all right? Not long term, right? So be careful. It's not, but if you did manage to get in, you're getting lucky. Your probabilities are definitely weren't in your favor to go bullish, but yet here you are, you're getting it. So be careful about getting a false sense of what you got here. So always be aggressive and just be aware of your stops, okay? Speaking of stops, here's our stop here on the monthly, right? And it looks like it's heading up to that. If we do trigger that, that will give us a little bit more points into the probabilities of being on the bullish side, but you're still going to get some pullbacks. You're still in this bearish, somewhat consolidation range, right? So because if we pull back up into here, we'll be back into this range. And what we will want to see too as well is right now we're bearish all around. The cloud, the Tinkerson, the Cajunson. We need to see these two flip, right? And even then, it's still some conflict, but it's going to be a while before crude oil really recovers. And even if you look before, it's been bearish anyway. It's been going down. So don't know what people would be thinking long-term wise, but I would be careful. But let's take a look at the weekly here. Let's see if we can get a little more clear picture of what's going on here. Maybe we can time some pullbacks, right? Ooh, look at this. Now, this is a breakout. It's not the highest probability of breakout. It would have been shaded. A couple other things would have been included in that. We did get triggered, and it looks like we are getting a small little pullback, but we'll see. All right, key thing is what is that pullback going to pull back to, right? We need to find some levels and go from there. I've marked off a few here just to gauge the strength, so if it pulls back to here and holds, pretty bullish. Pulls back to here, medium, right? If it pulls all the way back to here, we'll see. It all depends on where it closes at the end of the day, all right? Again, just trying to find clues in the market to help us understand the strength and the probabilities where they're going. So taking a look at the daily here, you can see it held. This level they already marked off. Clearly, here's a pivot, right? Became a support, still a support again, and now we're working our way up. If you were in this breakout, okay, you've trailed up. You've now hit preserve mode, okay? And your stop has moved from the Cajunson to the Tinkinson and actually got triggered here, okay? Now, two ways to play this. I treat it a couple different scenarios, like when I'm trading the ES or currencies. I definitely, even if it wicks down and hits my stop, I accept it. Stocks, I'm a little bit more linear because you get more spikes, or you get some spikes, faults, these things that they hit your stop, come back up. I'm looking for the bar to actually close on my stop before I get out of a stop. But again, that's what's experience. That's with me understanding my risk tolerance, just giving you some examples. Because ultimately, at the end of the day, you need to figure this out for yourself, and you need to do the research, the work, the homework, the experience, all this stuff for yourself, what you feel comfortable with. So either way, here it is. It technically got stopped out. All right. And you really need to mark off the bottom and the top of this range, and that's what we're looking at. So the 4 hour will give us a little bit more of an idea of this consolidation range that excuse me. And again, you can see it. It's struggling to break out. We have a breakout setting up, but look at this consolidation range, right? And it's getting smaller, okay? I always, consolidations, man, they like to wind up like a corkscrew, and as they get smaller and smaller and smaller and tighter and tighter and tighter, they're bound to break, and they're about to break hard. Which way? So we need to consider that, keep an eye on it, set the alerts. I would set alerts just at the top of the bottom of this range and wait for those to trigger and then come back and take a look at it. There's no point in really sitting here and staring at this chart. So, all right, let's get to good old Bitcoin. Man, I got to give it to you. If you're in it, congratulations. This is definitely the winner of the year. Hey, it's one of those things that I do worry about Bitcoin for this aspect, because especially it's new. There's a lot of new traders who are in Bitcoin. It's the topic, people are even talking about it's the new gold. Everybody's going to Bitcoin. In all honesty, that stuff kind of worries me too, because other than just the blockchain that's behind crypto, I really don't know what value it has other than just hype, and that's it. But I do think that whole crypto mentality will be a huge part of our future as we move forward. So again, I've always felt like Bitcoin was the introduction to get us used to it, to get us familiar with it, and eventually over time, I think ultimately this is where we'll go as a form of currency, maybe backed more with the federal mentality, but again, backed by what, right? Gold is gold. The dollar is backed by gold. Maybe some crazy idea the dollar would be backed by Bitcoin, some type of cryptocurrency, blockchain, who knows, right? Either way, we are in this, and this thing has really taken off, right? And it's given a lot of people, FOMO, fear of missing out. A lot of people who are in it, these false sense of reality that they're going to go to the moon. And, in all honesty, you really got to be careful, man. This is, it looks great. It's awesome. This is what we, you live for some of these moments for a couple of your accounts take off like this. But again, the reality is it's not the idea of a long-term trader. You want to keep things steady, more on the ETF level, mutual funds, things that will produce returns for you consistently over long-term, even if it's a smaller percentage yield. But when you do get into these type of trades and you do have these nice little pops, these lottery hits, you want to be careful. Where do you take profit at, right? When do you get out? When do you say, all right, cool, right? Because eventually it's going to peak out. Then what? And how do you call that? And how do you do that? So just, there's a point where you got to say, you know what, man, I'm cool with this. I'll take some profit, take some half off the table, things like that. You got to learn when to capture profit, because all this looks great in your account, but means nothing until you close that trade. Okay? Then what? It means nothing until you actually capture some profit. Right? So just be careful. Can't say that enough, right? Because this market's designed to take all your money, and I definitely think Bitcoin is designed to take all your money, because it's definitely been for day traders, it's the place to be if you love volatility. For like the past year, even the past quarter, in some of the chat groups I watch, man, I've seen some people getting eaten up alive, and I've seen some people who've really taken advantage of the volatility. So it's there. And congratulations to you big winners out there. This was the winner of the year. Got to give it to you. So take it in, move forward. As you can see here, there's this nice cross here. You could have get on in early. Minesh, who has I've followed and been a student of, was talking about this a good bit. I think it was back in October, November. And, bam. I'm not gonna lie, I haven't traded Bitcoin. I enjoy watching it. I don't mind sitting back and being a spectator on this one. But I got a lot of people who do, and they love it, and they're probably gloating, they're happy, and having a false sense of reality. So let's take a look at the weekly here. The weekly here is showing us a lot of overextension. All right. So it's starting to run out of gas, right? What goes up fast comes down pretty fast, so keep that in mind. But you can see here we did have a breakout on the weekly. We are well past our preserve mode, okay? And as we move up, our stop has moved up, so we're getting up there. So you at least have captured this much profit, moving the green line. So keep that in mind. At least this indicator here helps you gauge that and go from there. If you follow the black dots, you should have already gotten out by now, or at least extremely tighten up your stop. If not the green line or the green dots, go to the candles, bottom of the lows, right? And just keep trailing that. Each candle opens up, move your stop up to the bottom of that, right? Let the overextensions play themselves out, because you can see, look, you got overextended here, right? You would have got stopped out there, though, okay? Either way, you would have captured some profit, moved on. But just be tight on your stops, because it's coming, right? It is coming. Look at this daily here, still trucking. This is a breakout. This was actually a good breakout. This fit all the rules. Keep it going. Boom, 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 boom. You got stopped out here. You could have taken a chance through here with a pullback, got back in, and so on. It just depends on your risk tolerance, right? And let's see. Let's take a look at the 4-hour. Because this is a good little trend here. This nice little wave. We had a trend continuation, right? Held this consolidation, took off. Now we're going, and we're starting to get a little small pullback here. So we'll see. All right. So guys, really, really, really love the lessons from this year, and I hope every single one of y'all learn some lessons, even if you had to take some big losses. Look, man, losses are winners, because if you take the time to learn from your losses, you're growing as a trader, and you're going to win, and eventually it's going to all click and come together. And you just got to stay at it. You got to be careful. This system is designed to take all your money, everything from the commissions to so on, the volatility, you name it. So if you are not on your A game, you're only contributing to a system that's already designed to beat you up and take all your money. So you must be on your A game. You must understand your losers. You must understand your business strategy, okay? And every now and then you'll get these cool things like Bitcoin that pop off and take it. But the reality is a lot of it's more of a slow grind, okay? And that's essentially what it is. It's a slow grind over time, all right? Every now and then you get some pops, you get some winners that are cool like that. But guess what? You get some of those on the other side too. So you get some dips like we did in 2020, where the market just pulled back and probably freaked a lot of people out. I know so, because everybody around me in their retirement accounts, even my own parents, were like, wow, that kind of hurt, you know? But now we're back and we're good. And that's the lesson I learned this year, is that the retail people aren't built to stomach those type of major pullbacks. But if you look at the monthly on the S&P 500, it closed above the cloud. So it never went bearish. It never showed any signs of breaking down on that trend. So all the institutional people just bought in more, loaded up, and made tons of profit on a year that was really devastating to a lot of people. And it's probably why a lot of people hate Wall Street, because they take advantage of those moments and load up and make even more profit. But really, seriously, is it really up to us to hate the player or hate the game? Right? So keep that in mind moving forward. We're all players in this game, right? The system is what it is. Let's learn from it, okay? Understand your risk tolerance, because we're not the big boys yet that can take those huge pullbacks. So make sure you capture profit, get out, but then learn how to get right back in when those opportunities present themselves. And, I definitely learned some areas where I could have tightened up, because I definitely could have had a lot more profit. But it's just learning, man. It's part of the game. But I managed to get through, and I managed to get through profitable. So at the end of the day, it's still a win. My losses were still wins, and my winners were winners. So again, we'll see you next month. We'll go back over this and look forward to see what this year brings ahead of us, man. I can't wait. It's super exciting. And, yay. It's Michael Colquitt signing out. Peace.